Traders, I just sent a Aussie dollar, US dollar short sell into VIP, and what I want to do with the video is explain why I took the trade. It's counter trend, going against the grain, but here are my reasons. On the daily time frame, see how we've traded into this daily order block here, bearish order block. The target for this rally was liquidity above this previous candle. It's already tapped into it. On the 4 hour, it's traded into a 4 hour bearish order block. So we have a nested 4H and daily. Quite a strong level. I mean, it's already reacted off here. We've seen it retrace back down. Okay, so it's a fairly risky trade, given that we're going against this grain. It's bullish here with this trend. Quite like what I'm seeing in terms of how it's traded into this resistance. And I'll explain a bit more on the lower time frame. Now look, let's just disregard these indicators here for a sec. Have a look at this price action. Stop hunt. We see this base forming here. Higher low, lower high, higher high. So we've got this going on. This is a big resistance level right here. So I'm thinking, you know, something like that could be the thing. And see how extended this is here from this low to this high. Okay, so I'm thinking a pullback into a discount zone would make a lot of sense. All right, so you want to be careful. Okay, so you always want to have a look at price action and see what's going on. So that's the 4 hour. And the other thing we can do with this is mark up this candle down here, point of interest. Now I'm bullish. I think the US dollar looks like it's potentially reversing, not guaranteed until we see a break and retest of this high. So I want to see that, and then I'll be convinced. So if we see a break of market structure here, I'm good. This is a change in character at the moment of the trend, this one. And then if we pull a Fibonacci from this low to high here, my entry point for a buy, you know, will be down in these levels here. Around these levels is 50 to 61.8 fib zone. And the other thing we've got here is this thin candle, green candle imbalance, 4 hour time frame. Now, if we're bullish, given that we have this trend going on, then that makes a lot of sense. So I'm willing to take the risk with this and go for a short, a sell, counter trend. And if we come down into this time frame, have a look at this price action. Well, we've got here equal highs, a little bit of a tap above. I'm okay with that. Bit of a liquidity run. We've got the ICT displacement here through this section here. You can even have a look at it on a 3-minute or a 1-minute chart. This is a little aggressive, this one. I would have hoped that we traded back into this level here, this imbalance, but we push right through it, back up into these levels and got this equal high here. Okay, so it's a little bit aggressive, bullish, but what I'm anticipating is, I mean, it could possibly do something like this, and then I want to see, you know, the displacement lower. That's what I'm thinking. So I've gone in with a reasonably wide stop, well and truly clearing these highs in case we get a bit of a spike up here. And then my target, of course, let's have a look at it on 5M. Well, there's a couple of targets, but I'm mainly looking at this price swing, low to high. Okay, so my liquidity target area would be down around in here. You want to take partial profits off at least around this midpoint here, the equilibrium. Right, so if we pull a Fibonacci from this low to high, our 50% level here, well, you know, it coincides with the previous daily high. So we've got previous daily high right there. We've got the equilibrium of this swing here. So this would be a good TP1 level if you want to take partials. We're already short. And at that point, we could pull our stop loss down to be in the money and then see if we can trail it down to our 2R level. Let's go out to the 15. In fact, this swing could be pulled from way back here. Well, we've got a bit of a balance area in here, so this is a valid point. So this white line is the daily open. This is New York midnight. If we mark up the level here, okay, this is where it kicked off. So we've got our New York midnight open price, and I'm looking for, well, we've got this move above here. Yeah, I'm wondering if we see a little bit more action above there, but given that it's overextended and we've traded into the London Open bullish, I'm wondering whether we see this rotation and the retrace. Okay, so it's a counter trend trade. Let's go back out. Well, we'll do it on this chart here. And I mean, ultimately, we could even see a deeper retrace, guys. Let's just clear everything. As I said, a target around the 50%, you want to consider that smart money will be looking for a discount. And with this price swing here, low to high, the discount range is this red zone 50% down. Okay, so this is discounted. Right, so I would think that they pull it back down in here if this is going long eventually. If this is a reversal. Okay, so that could be a target. So it's currently running in profit, but keep an eye on it, guys. And what you can do is, we're in this trade. It is currently running in profit slightly. We had a good entry point. London Open, this blue line, or the London kill zone. Stay in it until, and watch this on the lower time frame, but stay in it until you see a break of market structure, however or wherever that takes place. So price will, and then at some stage, right, once we break, we get a change in structure like this. Once we break a swing on the lower time frame, you want to exit, because I think this is ultimately bullish, fairly strong bullish, as you can see. Our indicators down here are giving us a higher time frame, these green bars. Anyway, guys, that's the Aussie dollar. We'll be waiting for this to shape up down wherever it sort of lands, and then we'll be looking for a buy opportunity to get long. However, in saying that, it's Thursday. Quite often you'll find that the markets trade very aggressively in the opposite direction towards the end of the week, and that could happen Thursday, very often on Fridays, right? So we could see an extremely aggressive pullback. That's possible. Okay, not saying it's going to happen, but just be aware that Thursdays and Fridays are not the best trading days, as they tend to get aggressive with their stop hunting, gearing up for their Monday trend or Tuesday trend. Anyway, don't want to ramble on, but guys, jump on board. We've got the free 30-day VIP on offer at the moment. Won't cost you anything to try out our VIP membership. Our VIP signals, Tradingview indicators, tutorials, everything. Free for 30 days. Okay, so the link to join is on the website, tradingwithanthony.com. Hope you have a great day. Safe trading. Comment. I'd love to hear your thoughts, and we'll see you in the next one.